Very good evening to you both. Let's get to the first question. Charles wants to know about Disney.
Hello, I'm Charles from New York, and I've really taken an interest in Disney over the past couple of years. I feel they have a lot of potential as a company in both the entertainment industry as well as the parks. But with their stock being at such a steady price over the past couple of months and the confirmed exit of Bob Iger, I wanted to know if this is still a good entry point for Disney. With Bob Iger leaving after creating the aura that Disney has, acquiring Pixar, Marvel, and Lucasfilms, to name a few, do you think the drive to become the ultimate media and entertainment company is lost with his exit, or are his values still instilled in the company moving forward? Thank you.
Thank you, Charles, for that question. Delano, I'll come to you first. What's your take?
Thanks, Wolf. I think, Disney's a hold. We own it. We're still holding on. I wouldn't rush to buy shares. And if you look about it, the company hasn't lost its innovative streak. Through 2019, it was a darling stock. Obviously, we saw the quick ramp up in Disney Plus subscribers. And they still have that side of the business, direct-to-consumer, that's doing well. You obviously know that ESPN Plus, all those areas of the business doing well. The question here, I think, for investors right now is what's happening with the reopening side of the business with their themed parks and attractions. That's the area that investors aren't so sure on, including myself. They're at the whims right now of this powerful pandemic that we're fighting. And so, for investors right now, you want to hold on to your shares. But that strategy going forward on the reopening side is still yet to be seen, and it's obviously out of their control in most cases. So that's kind of our standpoint on that, Will.
Mike, how's this one been trading, and what's your view?
Yeah, so, the street had obviously been looking for some of the reopening that the viewer was talking about. And assuming that they got it, that would probably get the company to $6 in EPS by early 2024. Let's assume that you throw a multiple on that's higher than the company has historically traded at, but maybe a little bit less than it is today, of about 30 times. That gets us to about $180 a share in about 2.5 years. And that doesn't seem like a great deal of upside relative to the current $155 share price when you consider some of the uncertainty around whether or not we actually see that recovery in earnings that everyone's anticipating. So I think this is, it's a great company. They've got great products. I mean, obviously their dispute with Alphabet on the YouTube content front demonstrated that there's a lot of value to it. I mean, Google obviously had to cut the price of the YouTube TV offering by about $15 a month, I think, for that. But so there's significant value there. But still, I think this is just basically a hold here. I wouldn't reach out and buy it.
Charles, I hope that helps you make your decision on Disney. Let's get to another viewer question. AJ in California has a question about Tesla.
Hello, this is AJ from the Bay Area. I have a question regarding Tesla. I bought some of the shares about 2 months ago at a price a bit higher than what is being traded right now. My question is, should I keep the stock long term, let's say about 2 years, 3 years or so, or replace it with some stock in semiconductor sector? Appreciate your advice. Thank you very much.
AJ, thanks for the question. Mike, I'll put it to you first of all.
Yeah, so I mean, it's always very difficult to bet against Elon Musk, to bet against Tesla. You kind of do that at your peril. But the real question is whether this is a better alternative than getting involved with some of the semi names. And I think I'd probably favor the latter. I mean, what we have there is, probably less incoming competition for their businesses. If you take a look at the biggest semiconductor names like NVIDIA, these are companies that have big backlogs on their product. And it's not as if you have Ford, for example, coming in and offering the F-150 Lightning to compete as Tesla does. So when I think about the two industries and the multiples that they're trading at, even though we have seen relatively high multiples for some of the higher flying semiconductor names, I think they're well deserved. You have good growth there, and I think there's a good continuous tailwind for the next couple of years for their products. So I would favor semis.
Delano, we're not talking about either stocks being cheap on multiple basis here.
Not at all. And as AJ mentioned, he bought the stock and it's, trading a little bit lower. So from his entry point, the valuation just kind of got a little bit better for him. But I think there also, are a little bit of bullish trends in both sectors. If you look at Tesla, they're projected to double production and get to around 2 million by the end of 2022. Increased demand in China for Tesla. And obviously they're handling the chip shortage fairly well with the infrastructure that they have built out, conversely to maybe some of the upstarts that they're competing with. So, I would stick with Tesla. We own it. We like it. And if AJ is looking to maybe add to his position at a better price, I think that might be a good option for him.